Japan's stock market is the ultimate picks and shovels play. June 14, 2026. Japan's stock market is often overlooked by global investors, who typically associate strong returns with the U.S. technology sector, India, or more recently South Korea. Yet over the past 14 years, Japan has quietly delivered some of the world's best equity returns. A 100 investment in Japanese stocks in 2012 would now be worth about 532, slightly outperforming the equivalent investment in U.S. stocks and far exceeding returns from the FTSE 100. Despite lingering perceptions of Japan as a slow-growth, aging, and deflation-prone economy, the country has undergone a significant transformation. After 3 decades of weak growth, stagnant wages, and persistent deflation, Japan is now experiencing moderate inflation near the Bank of Japan's target, rising wages, and stronger domestic demand. These developments suggest that Japan is returning to the characteristics of a more normal developed economy. Another major driver of market performance has been corporate reform. Encouraged by the government and the Tokyo Stock Exchange, Japanese companies have improved governance standards, reduced complex cross-shareholding structures, increased mergers and acquisitions, and returned more capital to shareholders through dividends and share buybacks. More than 2/3 of listed companies are now raising shareholder payouts, a record level. The strongest argument for Japan's future, however, may be its exposure to global capital investment trends. The country is uniquely positioned to benefit from several major themes, including artificial intelligence, AI, reindustrialization, reshoring of manufacturing, automation, and rising defense spending. Rather than focusing on a handful of dominant technology firms, Japan offers broad exposure to the industries that provide the infrastructure and equipment behind these trends, the picks and shovels of the modern economy. Japan has long-standing expertise in sectors essential to the AI and industrial investment boom, including factory automation, precision machinery, power equipment, industrial materials, telecommunications networks, construction, and defense electronics. Well-known companies such as Kawasaki, Mitsubishi, and NTT, alongside specialists like Keyence, Fanuc, and SoftBank, are benefiting from growing demand for industrial technology and infrastructure. In 2026, the best-performing sectors in Japan have been metals, electrical equipment, and precision machinery. These industries are closely linked to AI-related spending through products such as optical fiber networks, data center infrastructure, and memory chips. Demand for machine tools has reached record levels, supported by investment from both the United States and China. The gains are not limited to technology-related sectors. Banks have also performed strongly as Japan's domestic economy improves and interest rates rise. Expectations of further rate increases have strengthened the outlook for financial institutions, reflecting the broader benefits of reflation across the economy. Although Japan has a history of disappointing international investors, attitudes are gradually changing. Foreign investors are increasingly viewing Japanese equities as a long-term allocation rather than a short-term trade. Domestic investors are also becoming more active in the stock market. Around half of assets held in Japan's tax-advantaged investment accounts are now invested in local equities, and households are shifting away from their traditional preference for cash deposits and government bonds. Challenges remain. Japan faces an aging and shrinking population, carries the highest government debt burden among developed nations, and remains vulnerable to currency appreciation that could hurt exports. Nevertheless, supporters argue that these concerns are outweighed by the country's improving economic fundamentals and its strong position in industries tied to global investment and manufacturing growth. As the world shifts toward building physical infrastructure, expanding industrial capacity, and deploying AI at scale, Japan appears particularly well placed. Its reputation for producing high-quality industrial goods and technologies may allow it to remain one of the most attractive stock markets for long-term investors. By The Telegraph, story by Tom Stevenson, June 14, 2026.